Welcome back to the Daily Nugget, daily property insights, one topic, 20 minutes or less, 7 days a week. Myself, Lawrence Lotze, and today joined by Andrew Armstrong, a mortgage specialist and fellow property investor. And AJ, the question to you today is interest rate changes. The interest rates, quite a few of them have just gone up recently. So obviously people are looking into it, thinking about it. What should people be looking into and looking out for themselves around these changes?
Yeah, it is. It's certainly something that we're seeing a lot of, and they're moving quickly. And as I say, subject to change without notice. They're often changing on a sort of, or at least a weekly basis, if not sooner. So, general advice around here, obviously, general advice is to, if you're thinking about locking in now, or you've got a rate coming up for renewal, get on and deal with it as fast as you can, as soon as possible, if you feel that rates will continue to rise. A lot of the banks have changed the way that they deliver interest rate offers. In the past, especially when we operate on behalf of clients, they'll say, look, this rate's available for 2 business days or 4 business days or what have you. Now the banks are saying, look, this is what it is right now. It is subject to change without notice. Yep. So we are in a sort of a difficult spot where we go to our clients, hey, look, this is the rates, but you need to come back to us by 4 o'clock this afternoon. And we simply can't take any responsibility for any, changes. Otherwise, it's just something that we can't deliver because of some of the timing that's involved here. So my advice is, hey, look, if you're thinking about doing it, get on, do it. A lot of the banks now do deliver interest rates online through your internet banking. You can typically fix in a new rate when you're 2 months out or 60 days out from your anniversary, and just get on, take action, make a decision, get it dealt with. We're often helping our clients, they give us a call, spitball some rates and thoughts and structures with us, and then, often we'll go, hey, look, but you're more than welcome to go and do it yourself online and just let us know what you decide to go for.
That's so true. I mean, up until a couple of months ago, interest rates was just dropping. To anyone in New Zealand, it was going for years and years, going down. So when your interest rates were coming up, you waited to that last day to go, cool, maybe something happens and tomorrow it drops again, and maybe I can get a 25 or 50 base point reduction to where I am, depending if you came off like a 2-year loan up into like a 6-month or 12-month. Now the cycle's reversed, and now it's going this way. But it's whether it's going to keep going this way or this way and hold. And this is where AJ is talking about. If your mortgage is coming up and you hit that 60-day mark, same as with me, you can ask AJ. I guarantee as soon as I hit that 60-day mark, AJ gets an email from me that day. And it's like, okay, dude, I'm 60 days out. What's the rates? What's the current rate? What's the deals I can get? And we spend literally no more than a couple of days, if a week at max, 60 days out already, to go, okay, let's lock it in. So I know that at that stage, I can get my best option, because in the New Zealand market, we need something drastic to happen now to break the threshold of going back up again. The rates are going up, it's going to go up again, and we don't see anything in the market. We've got a bit more stability. The economy is growing. We see a path out of the situation that we're in around COVID and so forth. So I don't see anything. I don't see a curveball bringing it back down. So that's where you just got to think about your own interest rates.
Yeah, absolutely. It's it's on you, I guess, as a property owner or mortgage holder to take action. It's all very well in saying, look, I've got a broker, he handles it, or a banker, he handles it. But you could imagine that if everyone's asking the same question at once, sometimes it's just impossible to talk to everyone all at the same time. So my recommendation is set yourself a diary note, not a diary note, a calendar reminder.
Yep.
So that it pops up on your phone. Hey, call the bank, get online, talk to your broker, get it dealt with. There's also a website that I often have a look at. It's a daily spot rates on interest.co.nz, and although it's not going to tell you where the rates are or what bank rates are, it's going to give you a little bit of a historical view on where things have been.
Yep.
And it may help swing a decision on what you think rates may end up being. But if you follow the historical trends on there, you can see certainly there's been a downward and a big dip over the last couple of years, and now it's recovering from that dip and certainly heading up again.
Yep. Just something. If you've got a loan, you just got to be proactive about it. That's just fundamentally, you got to pay attention, be proactive. If it's locked in for 2 years, good. I haven't done anything for quite a while. People are in their banks enough. They're in their banks at least once a month. You would hope so. Usually once a day. Pay attention. See when it's coming off. Like AJ said, put yourself for reminders. Some banks do actually call you up as well and go, "Hey, by the way, you're 60 days out, you're 30 days out." But they normally call you a lot closer to that date. They don't literally call you to 2 months out of it. And with the market moving at the moment, you don't want to wait those 2 months, because that could be 25 or 50 base points, which if you're sitting on a $500,000 or $1 million mortgage, that 25 or 50 base points does make a difference on your payments.
Yeah, don't wait for your bank to call you. You might get an email or you might get a letter, but certainly be proactive on it. And the other thing is that, some people are considering breaking out of a lower rate earlier, lock in for longer for that certainty. So we're seeing quite a bit of people going, "Hey, I'm on 2.19%. I understand that that's going for another 6 months, but we've made a decision that we want to lock for 3 or 5 years. Can we break and refix?" And often the answer is yes. There'll be a small admin fee or no cost at all. But remember, you're going to be foregoing the difference in your low interest between now and say 6 months away, in lieu of this new higher rate. So there's a lot of that consideration kicking around at the moment, and just got to put a few minutes thought into why and what's the purpose and the problem that you're trying to solve.
Awesome. Thanks so much, AJ, and to anyone else that's listening or watching at the moment. If you've got any further questions for myself or AJ, the details will be in the description, depending on which platform you're on. And as always, thank you for coming over to the Daily Nugget, daily property insights, one topic, 20 minutes or less, 7 days a week. And as always, hope to see you tomorrow.